as traders at UBA say as the market awaits the release of the first quarter 2024 bond auction calendar, improved offers are seen on the mid to long end of the bond curve. And for the T-bill side, buy interest is seen on the long end of the curve, particularly on the 26th of February bills. And Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, it's good to have you, and especially on Valentine's Day. Welcome back. Let's start off a conversation with how the market is reacting to developments so far. We're still awaiting the bond calendar. When is that going to come through?
Thank you, David, and a happy Valentine. The calendar is still not out yet. We are hoping that before the end of next week, the calendar should be out, because ordinarily the bond auction is usually either the last week of the month. So we expect the calendar to be out next week, hopefully.
And in terms of how investors are leaning across the T-bills and bond curve, let's talk about market interplay so far seen this week.
Yeah, so I will not start, I won't talk about the activity on fixed income market without talking about the liquidity situation. As you know, liquidity is the key driver of what happens on the fixed income deck. So system liquidity is quite robust. Yesterday opened around above 225 billion. Today is around over 400 billion. And so that has actually affected the activity on the fixed income market. I'll go with the bond first. So on the bond side, we've seen elevated yield levels. The 2053, for example, which is the longer end of the curve, is trading around 18%. On the T-bill side, we've seen the 1 year that printed around 19% the last time, slightly dropped to around 17.5. All expectation is on the MPC meeting, and that is why we've seen that a bit of quiet trading activity on the fixed income side, due to the fact that there's expectation of rate hike.
And definitely the signaling of more hawkish stance is quite clear at this point in time. But for investors, what should we also expect in terms of the rest of the week and next week, possibly?
So a lot won't change much as long as the system liquidity remains this positive. We see cherry picking on the shorter end of the curve of the bond, and then of course with elevated yields, any good trader will obviously want to start taking position from 17.5%, 18%. So I think this is a good level for most people to start taking position, especially with a system liquidity as this robust. So for the T-bill side, we expect to see also moderate trading. On the longer end, which is the 1 year, is a bit of activity. So we expect to see trading opportunity there, a little on the bearish side, and then of course a little on the bullish side, depending on the side you're on.
Sure, depending on the side where you're on. And wrapping up the conversation now, Chuka, development in the FX market. We saw the slight appreciation, 230 basis points. That was what the NAFEM rate closed yesterday. But 1,499, this is still quite the high. What should we expect when we're looking at the Naira's trading against the greenback?
Yeah, between Monday and yesterday, CBN actually intervened in the market. They are doing quite a lot. We saw intervention around 1,475 to 479 levels. So it's still a huge demand is out there. That's what is affecting it. But again, with what CBN is doing, and then most of the policies that have been put in place, I believe that this high rate of 1,400 levels will moderately reduce within the next couple of weeks.
Aren't you the optimistic? Chuka, we'll leave the conversation here for now. Thank you so much for your time on the show today. And do have yourself a lovely Valentine's Day out. And that is Chuka Nwachukwu, head of ALM and balance sheet management at UBA.